Worried about making your mortgage payment due to COVID-19? Today we're going to look at 6 things you need to know about mortgage forbearance before committing to one of these programs. So let's get started. The recent pandemic has been an absolute blow to the economy, and housing is no exception. 26 million Americans have already filed unemployment claims, and 3.4 million Americans have already entered into mortgage forbearance agreements with their lenders, representing 6.4% of all U.S. mortgages. What is mortgage forbearance? The specifics do vary from lender to lender, but basically it's when a lender allows you to defer payments for a period of time due to extenuating circumstances. How much time and under what circumstances? That's what we're going to talk about today. So you've lost your job, you've applied for unemployment. Do not assume that because you're hearing that people aren't paying their rent, aren't paying their mortgage, and that some states are putting a moratorium on foreclosure that you can simply just skip a payment. That's not how it works. That is a huge mistake. Forbearance is a serious word. It means holding back, as in holding back foreclosure. Forbearance is not forgiveness. It's really designed to give you time to gather the money from other sources to pay the bank what you owe. Like, for example, getting another job, selling other assets for cash, asking your family for help, or by selling your house. Do not take this lightly. If you can make the payments, it is in your best long-term interest to do so. But if you can't make a payment, you must communicate with your lender to avoid serious financial damage. The first thing you need to do is Google your lender's name with the term mortgage forbearance to see what comes up. I did this with my current lender, Wells Fargo, and it brought me to a very helpful page summarizing some of the programs that might be available to me depending on my financial situation. There was also a number with a representative to call, and honestly, these pages are very high level and non-specific, so you really do need to call to find out what your options are. Number 2, get your loan number out, make that call, and don't be embarrassed about it. It's so much better to be proactive and work out a solution now than to procrastinate because you don't know what's going on with your employment situation. Just work it out with them right now and get this one uncertainty in your life settled. Number 3, you need to thoroughly understand the terms of the forbearance they're offering you before you enter into any new agreements with them. These are the questions to ask. How many months or days can I defer my payments? Will there be late fees, added interest, or penalties? What happens to these payments at the end of the deferral period? Will all of them be due at once, known as a balloon payment? If so, what date will the balloon payment be due and exactly how much will it be? Or will they be added into existing monthly payments that begin after the forbearance period ends? And if so, how much? Or can they just extend the payments past the original period of the loan and tack them on at the end? These distinctions are very important to get clear on. I've actually been the beneficiary of forbearance in the past, and it can be a real lifesaver. We had a house in Puerto Rico during Hurricane Maria, which absolutely devastated the island. Almost nobody was able to work. There wasn't even electricity. Soon after, lenders started offering forbearance programs to help borrowers get through these unprecedented times. We called our lender, First Bank, and we asked them these key questions that I just shared with you. And we found out that fortunately for us, on a non-federally backed loan, which I'll talk more about in a minute, our lender was offering 3 months of forbearance with the 3 missed months tacked on to the end, no added penalties, basically extending our 30-year loan to 30 years and 3 months with no harm to our credit. It was super helpful. This brings up number 4, an important issue to consider when you're speaking with your lender. Find out how this forbearance will affect your credit. Don't just assume it won't because we're all in this together. Ask your lender specifically, how will this be reported to the credit agencies? Will deferments show as late payments, or will they show as not paid as agreed? How will this affect my ability to refinance? How will it affect my ability to get a new mortgage? If you're not reporting to the credit agencies, will that raise a red flag? Earlier I said that forbearance is a serious issue and it can be implemented in different ways throughout the mortgage industry. It could mean a full moratorium on payments. It could mean a reduced interest rate. It could mean a reduced payment. It might mean a balloon payment. Or it might mean simply adding the interest and the payment to the end of the loan, which is what happened to us after Hurricane Maria. You have to call the bank and ask a lot of questions to be absolutely sure. Number 5, if the forbearance or loan modification solution that your lender is offering sounds workable, then get the agreement in writing. Ask for a complete term sheet so that you understand exactly what it is you're signing up for. Have them email it to you and read it word for word. Always consider that the customer service rep that you're speaking to may be new on the job, maybe not that well informed. Even though they may seem super nice, you must get your work out in writing and read through the fine print to understand every nuance. And if something is confusing, call the bank for clarification. Don't be embarrassed to call more than once, talk to more than one person, and ask multiple questions until you understand exactly the terms of the arrangement. And by all means, get help from trusted advisors. This includes your CPA, your financial advisor, mortgage professional, or family attorney if you have one. Number 6, you need to know whether or not your loan is federally backed because this can make a big difference in the forbearance offer you receive. The CARES Act covers 2 categories of loans. It covers loans that are federally owned and loans backed by federal agencies and entities. About 38% of the mortgage loans in the United States are not federally backed, according to the Urban Land Institute, and therefore are not eligible for this protection. So let's say you call your lender and you talk to them about your situation. Ask them, is my loan federally backed or privately owned? You may very well have a loan that's held privately on the bank's books, which means the loan has not been sold into the secondary market, which means it's not federally owned or backed, which means that what the bank does with the loan is entirely up to them. And that's not necessarily bad. In my situation with First Bank of Puerto Rico, we actually got a better deal with them on our privately held loan than other people with federally backed loans were getting. So again, you really just have to call your lender and have a thorough conversation about your situation. Find out what they can do to help and understand how it will impact your payments, your timing, your credit rating, and your overall financial situation. So those are the basics of mortgage forbearance. If you have any questions about the process, put them in the comments below and I'll do my best to answer them. Don't forget to like and subscribe. Thanks for watching, and I'll see you next time. The recent pandemic has been an absolute noise. You lost your job, you've applied for unemployment, and saw. Gotta do everything 5 times because of the dang saws. Really? Oh my God, it's never gonna stop. Wow, it's just not gonna stop. Oh my God. Okay, here it comes. No, oh.